The S&P 500 just suffered its worst week since May. The Hindenburg Omen just triggered for the first time since last year's fourth quarter sell-off. But it seems like investors are expecting the Federal Reserve to step in and save the day.
As Matt just mentioned, the S&P 500 had its worst week since May, and it was down about 1.2%. The Nasdaq was also down about 1.2%, while the Dow Jones down 0.6%, and the Russell 2000 was down the most out of the US indexes, down 1.4% for the week. Foreign and emerging markets were mixed last week, as foreign markets were down a little bit over 0.1%. and are now up 14% for the year, while emerging markets were alone positive last week, up about 0.75%, and now up over 11% year to date. Today we wanted to look at a chart of the US dollar, and we want to look at this for two separate reasons. First, the US dollar is at a very important technical level. And second, with the Federal Reserve hinting at a possible rate cut at the end of this month, all eyes are going to be on how the US dollar reacts. Looking at the chart, the US dollar broke down below its uptrend line in June of this year, and that's the rising blue line going through the middle of the chart. And now the US dollar is currently right under an important resistance level at right about 97 on the chart. And that's the straight blue line. So while we're at a key technical level for the US dollar, that makes the Federal Reserve's decision about interest rates at the end of this month even more important. Because obviously, we want to see the US dollar be as strong as it possibly can be. But a weaker US dollar could actually be good for some multinational, large cap companies, as this means that American goods can actually become a little bit cheaper.
Last week, the Hindenburg Omen triggered in the New York Stock Exchange and the Nasdaq. And historically, as you can imagine, this isn't a good thing for the markets. Now, this is an indicator that happens when the markets are at all-time highs. And it measures the number of companies inside of an index that are at 52-week highs versus the number of companies that are at 52-week lows. And it tries to give you the percent chance of an upcoming downturn in the market. Now, the last two times that this triggered was February and October of last year, and the market followed with two pretty significant pullbacks. And historically, when this omen triggers, the market is positive 1 month later, only 23% of the time. Now, at the end of last week's video, we said that we were going to be anticipating the upcoming earnings calls for J.B. Hunt and CSX, which are two major transportation companies in the United States. Now, both companies hit revenue goals, but both of them also stated on their conference calls that they see a global slowdown occurring. Now, President Trump over the weekend also started to talk about a possible economic slowdown in the near future, and cited that the Federal Reserve needs to step in and start cutting rates now because they raised rates too much, too fast, and that this is an opportunity that they can't miss out on. It seems like the pressure is continuing to pile on the Federal Reserve to cut rates in 2 weeks, and it seems like President Trump may just get his wish. Two things to watch for this week are the second quarter GDP numbers are going to be reported, and also 30% of the S&P 500 reports their second quarter's earnings.
The biggest meeting that we're going to see so far this year happens the last few days of July, when the Fed meets to discuss if they're going to be cutting interest rates, and if so, by how much.
Thanks for watching, and if you're on YouTube, please like and subscribe to our channel, and if you're on Facebook, please like and share our video.